Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. We'll be getting into that shortly. Just to give you a heads up, this week from me, tomorrow evening, 7 p.m. Sydney time, I'll be going through trade orders and execution in the MT4 platform. I'll take you through different order types so you can understand what they are, and then we'll get into the platform and show you how to execute them. And then on Thursday, we have more live market analysis, 7 p.m. Sydney time. If you want to join me for those webinars, just register your interest at the webinar page. Ricardo, hello to you. So before we get into tonight's webinar, if you can all read through the disclaimer, for those on our YouTube live stream, I can't see the chat there, but you can join us in the webinar by following the link that I've given you there in the chat. For those in the webinar, talk to me in the webinar chat box or the Q&A box. I've got both open. So just take a moment to read through the disclaimer before we move along. Okay, let's move along. So for those that don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities. And I'm a full-time Forex trader. I've been trading almost for 20 years in the Forex market, mentoring for more than 10. If you want to contact me about the webinars, my email's on screen, duncan.cooper@acy.com. You can connect with me through the week at our website, acy.com, go to the Market News tab, or at our YouTube channel, which is at XAUUSD Australia. And if you want to connect with me personally, just head over to my Linktree page. My Linktree handle's there. And if you want to get access to the charts I'm using in the webinars for MT4, just contact Nathan.bray. His email is on screen. And for those in the webinar, I'll give you the link, or I'll give you Nathan's contact details so you can link up with him. There we go. All right, so let's get first up into the news for the week. So last week we had a very big news week. And of course, we have the US interest rate decision cut and potentially further cuts coming. US dollar has been getting weaker against some pairs, especially the pound. Other pairs, a bit sideways. Not sure myself how much more the US dollar could weaken. It is holding on support, which we'll get to in a moment. So let's just go through the main ones for the week. We've already had the Aussie cash rates, RBA statement, no change in interest rates there. Did get a little bit of gain on the Aussie before, then a sharp sell. So it'll be interesting to see if we are actually topping out. We've got the CPI data coming out tomorrow. So up next will be midnight my time. Getting into Wednesday, we have the USCB consumer confidence that can drive the markets. Trade 10 for Canada, we've got the BOC Governor Macron speaks. And then tomorrow, this is important because if you look at the figures over here, they're saying that we're going to get down to 2.7% year-on-year inflation in Australia. That's what they're forecasting. So the market will be clearly watching to see if we get such a drop. That may then hint at an interest rate cut, obviously. Maybe an earlier one than expected. Expecting no interest rate cuts at the moment in Australia this year, so the RBA says. But if this figure comes in much better, I'm sure there's going to be lots of talking it up. All right, so watch the Aussie pairs at 11:30 in the morning, 5:30 p.m. tomorrow, sorry, into Thursday. Now, 5:30 p.m. for Swiss, we have the interest rate decision policy assessment, policy rate, expecting 25 basis cut there. Press conference at 6:30 from the Swiss, 10:30 p.m. Thursday, US final GBPQQ. Now, of course, all these US news items coming out, like GDP, CPI, and job figures, the market's looking at these figures because if they don't keep, say, weakening, if they keep growing, That's going to lessen the idea of getting more interest rate cuts, I would think. So the market's going to be, as the Fed's been saying, we're going to get more interest rate cuts. The market will be looking at the data to confirm that's what's going to happen. All right, getting late into Thursday, 11:20 for the US, what Fed Chair Powell speaks. And then 10:30 p.m. on Friday, we have Canada's GDP month on month and the US core PC price index, which is an inflationary figure. So the market will be looking at that quite clearly at 10:30 on Friday. All right, so a few things that can drive the US GDP, Fed Chair Powell speaking, and the core PCI price index there. Be aware when they're coming out. So let's get into the charts. Now, a dollar index is still holding down there at 100.30. So on the monthly chart, it's this area here. Weekly charts did trade underneath last week, but closed back above, slightly positive for the week just. And there's a 79% level of that range there that we're kind of hanging around. Market's not being prepared to commit below. It's a bit sideways here. We have a higher bottom, lower top, higher bottom. Are we going to move up to a higher top or not? We have had 62 to 79% retracement here where we rejected support to move back up. So market's very sideways on the dollar index because the euro dollar's slightly weak, likes the pounds going up. Aussie's been going up. So is it going to find a bottom there or not? So watch the structure here. If we start to quite clearly show an uptrend, after holding here for a good 2 weeks now, if not 3, it's holding here until it's not. So I'm anticipating this may move up and the euro dollar may move down because the euro dollar doesn't want to take out the highs at the moment. So we'll have to wait and see. And the S&P 500 is moving up to a fresh high today. It's moved above here now. I wouldn't want to buy it at the top though. I would want to see some kind of a pullback that I could trade if I wanted to trade. And these red dashed lines are my weekly range. So I would look to a pullback within the range. So we're just testing last week's high. So if we could pull back to the 62.79% area of last week's range, at least that would give you a corrective move. So you have the opportunity to buy a dip. So look to where price could pull back to. So using that range at the moment, I'll just move the fib up if price keeps moving up. But if we can then pull back to the 62.79% area at the moment, it's 56.53 down to 56.31. So I'm never going to buy at the top of a move. I would want to see some kind of pullback. Chances are we're going to have another week up, but can we pull back within the range of last week before we have a week up? Or a much further week up. We've just traded fractionally above last week's high, but we could now trade down before coming back down to a lower level before moving back up. That would be a logical area to watch. And it's also last month's high in that zone too. All right, so the euro dollar. You can see on the euro dollar here, since we've had the interest rate, I think it was this day. Let me just count them back. So it's Tuesday, Monday. It's this day here. This big rejection day to the downside was when we had the interest rate decision from the US. So the Eurozone hasn't been able to, gain strength. So the euro itself, that's the high of that Wednesday candle. We haven't been able to trade above it. Pound dollar's been keeping moving up. So this is a lot weaker. Hasn't been able to take out the August top. So what is it going to do? Is it going to eventually move through here, or is it in a topping out phase? So the weekly chart is in an uptrend here. I've been watching this fib across this range, and this week we have been back below the 79% level, but then back above. And there's a weekly high here that we're negotiating today. This is probably the main level to watch at the moment, this high here. Do we start to want to hold at that high and move at least back down to support, which is around about 110 at the moment. So it's rather choppy in here at the moment. You can see quite large days up and down. And it's just asking itself at the moment, can it get above the weekly high over here? Is it going to come back up to this daily high here at 111.55? So to the 4 hour. It's a bit mixed in here. Strong move down with the data yesterday, which was the flash manufacturing service data from Eurozone. And then we've been reclaiming it. So yesterday's range was here. So we're just coming back up within the range of yesterday at the moment. Bring that to a 15-minute chart. So in the rally from the low yesterday, we could only hold at that weekly level. And there was an area that was getting support on the weekly level at 111.39. We're in the zone where we could top today. There's an imbalance in here that may need to get filled after the news of Eurozone yesterday. 79% level up here. We wanted to trade, I think I would look up here. 79% level up to 11.55. Now we might not get there, so you need to monitor. We may see that we can't take out this high with any conviction, and you might be able to see, a tight trend line break in this area down from 111.39 to get short. So 111.39 up to 111.55 is a zone where we may put in the high of the day. So just keep monitoring to see if we start to falter. Euro yen. Now, on these yen pairs, most are putting in a higher bottom on the weekly, to the weekly. So we have like lower top. There's a lower top here. There's a lower top there. And there's a higher bottom here. So it's not that easy. It's the same kind of story in all the yen pairs, except maybe for the dollar yen. I'll have to refresh my memory on that pair, but we're getting this kind of lower top, higher bottom scenario. So it could go either way. What I am noticing is if you've got a day chart is there's a definite range of high to low here. That's actually this month's high to this month's low. Put in a fib. And you can see the last two trading days have been holding at the 79% level. And today we haven't quite got there. So that's last week's high. False brought last week's high. We just traded a fraction above it just. So again today, we might come back up to retest last week's high. We may just want to hold within this range. Drop to 15. So at the moment, this 15-minute structure is still in an uptrend, but it's in the zone where it could definitely want to falter. It's faltering at 161, just short of last week's high. It's come up to fill any imbalance in this drop yesterday. So the question is going to be in this area, does the 15-minute chart trend turn to down? Can you at some point see maybe a tight trend line break in here that could get you short to trade back down? All right, it's too high up within the range to buy at the moment. So you have the option of doing nothing or looking for a short back down that range there. And if we do start to go short, structure changes on the 15, back to that daily, back to the 4 hour. This is the range that I'm using on the daily. We could see a failure up here. You could be putting your stop above here. And we could be trading all the way down to at least back down to support. All right. So can you see a trigger that says, okay, we are turning over to the downside? we're definitely in an area where we could start to see that. So I'll just leave my 15-minute chart up. Because the pound dollar's been going very strong and the euro has been a little weak, then of course the euro pound's now broken through support. So having been quite awful sideways in here, it's broken below now what is weekly support, and it's broken below what is monthly support. So we need to get in this area. 82.76 is the next major level of support. If we keep on down, again, alter the wrong line. Level 83. All right, so on the monthly chart, we're just below the 83.40 level. Next level further down is 82.76. So the monthly trend down, it's broken below the area that it was getting support from. And you can see that it's, you know, if you all you did is look at the monthly chart, it is lower top, lower bottom, came up for a lower top now that we've broken below last month's low. Weekly, down. $83.82 is the last major weekly low broken. You can see we've had lots of stops going off here. I would look for price to come back up now to sell the rally. This area of weekly support that was. Look to that to be resistance. Okay, so here's your 4-hour. I'll actually draw a fib from last week's high down. And if we keep moving down, keep dragging the fib down, 62 levels just a little bit above 83.97. So I think in a perfect world, you want to see price come back up. You got last month's low there, 84.01 is 62 level, and you have the figure in there too. That would be the ideal area to watch for a short if price have a rally. All right, don't want to be shorting at the bottom of the move. You want to see a corrective phase occur and see if you can get short in line with that breakout below support. Okay, pound dollar. Now I just want to start on the weekly chart. This major range here, but we'll go to the monthly because that's the big monthly range here. We're actually coming back up close to. We don't have to get up to it, but it's important to understand where we're at relative to 79% retracements at 134.03, so that's like 30 pips away. Look left. There's a high over here at 133.38, which we're above. There's a couple of highs, 134.82, 135.14. So depending on where we get up to, there's some resistance to the left there. But what I wanted to point out was just right where we're at right now, that's where we started the big drop. Kind of sideways in here, and then this is where the whole move, go to the weekly chart, this is where the whole move started to initiate. After being rather sideways in here, this is where we initiate to the downside. So we're going straight back into the area at the moment, so it wouldn't surprise me to see the market put its brakes on at this 79% level in the short term. So we're just moving above 133.57 resistance here at the moment. I just put this high in at 136.43. That's a long way away at the moment. May not get there, but it's there in case it's there on the radar. main level I'll be watching was what happens at 134.03. So the figure there, 134, because that's a 79% retracement of that major range. And, in terms of moving up, we've had one up, pullback, two up, pullback, three up, pullback. This is a fourth leg up. So we may be getting a little long in the move. It may need some correction, but it's worth understanding that we're not in the early phase of this move at the moment. We're long in the move. So how much longer can it go? Is what I'm trying to get to. So at the moment, days remaining up. This week, yesterday, pulled back to weekly support, 132.66. That was support on Friday, Monday. 4 hour is an uptrend. It's a bit overextended now on the move. So we broke trend down there. So if you drew a fib across that range, to the upside here, we'll be on the 127R. So we're due a pullback, really. But having said that, we had a minor pullback on this 4 hour candle and then gone up. So if that is the low of the day, then I would look for, if you want to get long, so high up, but if you want to get long, the weekly level that we've broken above, we probably don't want to see price move back below there for the buyers. So if you're wanting to get long, you'd watch for price to come to the 62 level down here. You'd want to see it quickly come back above 133.57 because you want that to be support. And then you could look in this area for an opportunity to get long if it could pull back for you. This moving below today, 33.57, and not wanting to get back above. So if it spikes below and comes back above, great. If it just starts selling below and doesn't want to come back, then I wouldn't be looking for a buy there. I would just be sitting on my hands waiting to see what's going on. All right, so there's the buy kind of area at the moment, 133.57 for support. No real short. The only short I could look for at the moment would be to see a clear change of the market sentiment. So this would need to drive today clearly down. And then you could look for a rally back up for a short. Other than that, it's not in sell mode. So look in that area. Pound yen. It's within the same range as on the euro yen I was discussing. So the weekly chart's going to show you that we have high bottom, lower top. So if we take that top out, well, at least that will clear the weekly trend out. In here, we've got weekly resistance, 193.52 across here. That's why we put that top in there, opposite there. So don't buy at resistance. You could look up here for a short, assuming things change trend. At the moment, the 4 hour trend is still up. If the 4 hour structure changed to down, then I could start to look for an opportunity to get short. Or, so 4 hour structure to change at the moment from where price is seeing right now, we would need to see a lower bottom break, then a rally. And as this turns over, you could look for your short back down the range. That's assuming that it's going to hold here. You could look on a 15-minute chart. For trend line break. We don't have that yet. Over the next hour or two, we may just blow straight through the top. But I don't buy into tops, so I don't have a setup for a buy. You could look for, if this was to hold here, let's say you just don't want to go short up here, but even if it turns over here and you don't want to go short, you've got much more bullish attitude to the pound yen. You could drag a fib up from here to wherever it tops out at. It's there at the moment. And then look to price having a pullback to this 62.79 zone, and then look for a turnaround there to buy the dip for the break above. Okay, so if you want to buy, you need to buy dip. And if you want to get short, you'd need to look for a reversal to turn over. It's not quite there yet. All right, Aussie yen. Same as the euro again, really. It's got CPI data coming out tomorrow, so it's going to be a little bit difficult. But weekly chart, higher bottom, lower top. So it's coming up to this old area. When this started to move down here, I discussed this could be a left shoulder. Of course, 2 or 3 weeks of trading has occurred. So we could see falling CPI. I mean, we could trade up to 90.02 today. I mean, today you could be shorting at 90.02, 90.100. Stop above here. We could be 100 pips further down come CPI tomorrow if the market wants to reverse today. All right, so I think up at the 90.100.02 level there, we've already traded probably up to 90. Where have we been today? We've been up to $98.94 at the moment. So we haven't quite been up to the figure, but you might see some weakness up there at the figure. All right, so at the moment, the 4 hours remaining up. So if you're bullish and you want to have an opportunity to get in long, if you're not really long, you just want to look for a fib pullback within the 4-hour trend. And that would be down here at the moment. 98.12 down to 97.90. Encompassing the 9800 level. If you like the idea of the head and shoulder pattern, so the opposite trade, so this head and shoulder pattern here, left shoulder, head, coming up for a right shoulder, then you could just trade up here at 9900.02. If we don't get up there and it starts to turn over, you could, if let's say it tries to get up here and it can't, it starts to trade down, you could look to short at 98.51, stop above wherever the high point is here for your entry to trade down. Or you could wait for 4-hour structure to change, wait for break of support on the 4-hour, rally back up. We may get some kind of, small head and shoulder pattern form over the next couple of trading days. So let CPI pass, we may drop, we may move up, but if we drop, we may then rally back up to form a little head and shoulder pattern on the 4-hour. And on the 15, it's getting a little bit messy on the 15 with the interest rate decision and CPI coming out tomorrow. This is getting a little lower tops, higher bottoms at the moment. It's not, getting long there is not the best idea. That's a horrible area to get long. Should have been long already. Like long down here yesterday at the central pivot point. Or long today in here, Reviewing price action, there's a little 79% pullback at the central pivot. But that was earlier in the day. All right, so price is pretty horrible here at the moment. But if we did come up to 99 today, and then you could see, some kind of tight trend line break to the downside up here, That could be a good tight short to move down the range. Aussie did move up after the interest rate decision here on my 50-minute chart, then had a heavy sell-off back down to last month's high. So at the moment, the weekly's up here, and the monthly is range bound. Almost came up to that monthly top of the monthly range. So let's just go back to the monthly. It's really, whilst we have been moving higher, we're still very much kind of been in this area for a long time. So which way is it going to go? Weekly is up, higher bottom, higher top, higher bottom. As I said before, when we failed here to move down, I said look left to what happened the year before. All this resistance over here, all this choppiness here where it didn't want to go any higher than this area. Then it came back up to this area late December. So this is late December's high. We've been a fraction short. Wouldn't be any surprise to see a failure there to move all the way back down to where it came from, went down to there. So we could easily move back down to 63.60 from where we're at. You can see the range, you can see all the tops to the left. So we trade until we break out to prove the point. Just because if we trade above this top or even these tops here, that does not mean to say we're going high, because this traded above that top, held and failed at resistance and traded all the way down to there. So this is in a very difficult area now to move through. All right, so daily, if you're bullish, I think on the daily perspective, this is now kind of 3 or 4 days up. You'd want to draw a fib across that daily range and look for the next, allow it for a 62.79% pullback for another higher bottom to form if you want to trade the upside. Look for a healthy dip because we're very high up. For our chart, it's just had a very negative outside candle, slightly short of that monthly 68.71 level. So you can see the sell-off. If you think this is a shorting area, you want to draw a fib across that range and look to 79% area, 68.56. For shorting there, I'd want to get my stop above 68.71. I wouldn't just be putting it above this high because we could come up to test 68.71. So I'd want it above 68.71 if I was going to get short up there. Personally, I would probably, at the moment with CPI coming out, I would be waiting till post CPI, because if that comes out very strong figure, because tomorrow we're expecting a weaker figure. If it comes in nowhere near what they're expecting, so they're expecting 2.7. If that comes in nowhere near 2.7, we'll probably fly up. So I don't want to get short today. I don't like trading fingers crossed. The fingers crossed approach. So I would wait to see where we if we came up and rejected up here after CPI, great. I would probably tend to leave it alone. But if you don't want to, have a look up here at the 79% level. At the moment, last month's high, which is 68.23. So to the daily chart, that's this high here, is acting as support. You can see it today. We came back below it today. It has been intraday support for at least move it back up to fill some of the imbalances that occurred in this drop down. All right, so from a buy side perspective, whilst I would like a healthier pullback on the day chart range, I tell you 68.23 is acting as support. So over the next day, from major levels, support 68.23, and resistance is up here at 68.71. Up to the day chart, squash it in, 68.71 up to 68.99, because CPI tomorrow can definitely drive it up to these two highs over here. All right, so when we get extremes, expect price to want to struggle at the extremes and move back down. All right. Be interesting to see if we can get up to 69 area tomorrow. That would be a good area for a short. New Zealand yen, it's going to be the same as the other yen pairs. The weekly is lower top, higher bottom. It's getting above this weekly resistance area. It's coming up to 79% level of that range. So if you're looking to short any of these yen pairs because you think we're back up to the high end of the weekly range, which is kind of mixed at the moment, I'd probably let it turn over, and I'd want to see whatever pair I want to trade. I'd want to see all the yen pairs kind of doing the same thing. So we have a correlated move to the downside if we're going to fail at the tops up at these rally points that we're seeing. So I'd just watch this 79% level 90.51. You're really here on the 15. Do we get a reversal or not? Can you get tight entry here? New Zealand dollar, very sideways at the moment. It's just going up as I'm talking, but you can see all the choppiness in here. Just trying to get above last week's high at the moment. To the daily, this August high, can't take it out, much like on the euro dollar, can't take it out. And it's back into the area that I've discussed before, this choppy sideways area over here. The whole area is there. All this choppiness here before breaking down. So we're coming back up to where we initiate this last sell movement down of significance before this low, before these equal tops here, before equal lows down here. So you can see it's not been great on the daily for the last 4 days. It's rather choppy. It's just trying to move above. You got a 79% level from this high to low in here, and a 79% level from this high to low as well. Just a little bit above there, but you can see how difficult the market's been trying to move through this top and those two 79% levels. So to me, that's not a great area to get long. I'm not quite getting a signal yet that I want to go short. I'm very much aware of this area over here that was consolidatory to break to the downside. So I don't have to trade a pair if I don't like the look of it. I can just sit tight and wait. I'm not going to buy in this area because it's so high up within that large range. I'll just sit tight to see if it can maybe show you a reversal back down the range. If I wanted to get long, which I don't, but so you can see where support is on the 15-minute chart at the moment, all in here. So that's the best place to buy at the moment if it revisits, because that's been proved today where the buyers are wanting to come in. Now we may find today that the sellers want to come in up here because this is rather range bound. So that's where I would look for a reversal back down today, intraday. Support down here. Just want to know what the euro dollar is doing. Pound still going up. All right. Dollar Canadian. Let's just go through the time frames. Now, I've been focusing on this monthly range, this monthly trend, which is kind of sideways, but it's the higher bottom, higher top. Last month we pulled back to the 62 level. This month, all the trading is inside the range of the month before. We haven't moved to a fresh low or anything. We have put in a lower top, lower bottom, lower top, but I'm concerned that this area is support on the 62. And we're actually going to go this way, back up the range. I know that weekly's down, but so this on the day chart, this is this month's low here. So all the price action this month is within the range of, let's go to the 4-hour chart. It's in the range of last month's candle. So this month, all the price action is from that low. That's the whole month's range. And what I've been looking at is this range. Yesterday came down to the 79% level of that range that we've been forming this month. Okay, just want to get rid of that big box. We've been coming down to fill the imbalance to the left. And yesterday we reversed, we went below, but reversed back above the 79% level, which is very close to, that's 3508, close to 3500. And we came down, to fill this imbalance here. It's probably a bit more imbalanced there on the 1-hour chart. So it's filled out the whole imbalance on the 1-hour chart and the 4-hour chart. There's probably more of an imbalance on that 1-hour candle there on the 15-minute chart if we really wanted to get into it, but we don't need to. So it's come back in to fill any imbalance on this. See, that was a very strong upward move here. That was the job figures, I think. Come back to fill any imbalance there. And today we had an imbalance form there on the 1-hour chart yesterday, which we've come back to fill. And we're straight back to the 79% level. So if I wanted to trade this pair, is watch that 79% level of this month's range down to the figure. So 135.06 to 135.00. We start to show a move. Is that going to be support to move back up? We could see a long-term move back up this way if we see a bottoming out process. So you can maybe get in tight here, limited risk, starts to move up, get the risk out, and then can you hold it for a move up? Because if the euro dollar isn't going to take its highs out and move down, that's going to give you obviously US dollar strength to the index, and then we may well see all the pairs follow the same kind of suit. So this would move up. All right, dollar franc, it's very sideways. It's very difficult at the moment. It's sitting on weekly support. It keeps getting support where I've been saying, but it's terrible price action. I wouldn't trade this at the moment. Here's the weekly. It's getting support on weekly support here. It's getting stuck for resistance on the monthly chart at that low there. So you can see how sideways it is. From long periods of sideways price action, we'll get a strong break. As we're so low historically, if Swiss is going to cut rates, that's not US dollar franc negative. That should be US dollar Swiss franc positive, because the interest rate differential vastly favors the US side. So this consolidation that we're seeing at the moment could be a period of buying at very low levels to break up. But of course, until it breaks, we're not going to know. If I wanted to trade this pair, which I don't, but I would look to that range. Look to the 79% level into these lows. Look down there. If we could take it down to the lowest low, that whole area there, that's where support is. So if the market is consolidating to move higher long term, you want to try and look for an entry at the lowest end of the consolidation. So it's like 84.11 down at 83.73. All right, pound yen, just want to check the weekly. Weekly slightly different to the other yen pairs. It is coming up from a lower bottom, so the structure on the weekly is still down. I'm using the last minor weekly lower top there to the lower bottom. It has reversed on monthly support, which I discussed a week ago. And the daily has put in a minor high bottom here. But with the dominant trend being, we have traded below the monthly low over here, swing point low. This weekly structure is still down, even though we're coming up to a daily uptrend. You know, it's not showing massive strength at the moment. This week, just want to double check what I'm saying. This daily area of support here, you can see today's low has got support there. So it is showing strength now on support. Close above there 2 days. 2 intraday days, we've been getting support down at 143.41. So need to be aware of this area for the sellers, 145.56 to 146.47. At the moment, it is moving up. So for our chart, as long as it keeps his 4-hour structure up, look to buy a dip into the 62.79% area, like so. But I'll be cautious once we get up to the 79% level of that range, because that's where we could fail. It's getting rather consolidatory in here as well. So, you know, if I'm looking for a pair to trade, I don't know if I'd trade this pair at the moment. It's looking a bit consolidatory on the 4-hour. I don't like the fact that it is into the 62% level of the weekly range as well. So if I was looking at probabilities, because that's the weekly top to bottom, there's the weekly chart, there to there. We're at the 62% rally point at the moment. Whilst the 4-hour structure is up, it doesn't mean to say I have to keep trading up. I can step aside and maybe think the higher probability thing would be to wait to see if we fail at the 62% level and look for a short as and when it gives me a signal. Because we could move it to the daily. There's the weekly movement down, previous one. This could just be a rally to move down. Last 2 days are getting support on support at the moment, but if that support gets withdrawn, that's probably what's going to happen. So I'm very much on the fence with the yen pairs at the moment. I'm not trading yen pairs. I'm not in any yen pair at the moment because I'm not a bit unsure of that week, you know, the overall weekly trend. Because here on the dollar yen, we've reversed from monthly supports, but the weekly trend is down. Is this just a bounce, or is this going to be substantially more? I don't know. And when I don't know, I like to stay on the sidelines till I see a little bit more certainty with a given pair. All right, let's just finish on gold, which there's no uncertainty where the trend is on gold. It's breaking higher. Higher with fresh high today. I think really on the day chart here, all trends are up, monthly, weekly trends are up. I think you want to look for a pullback to the 62.79% zone whenever it happens. I just want to see where we are within the structure of the weekly chart. So we came up to there, so we came up to there, because what you have to be aware of, just because it's screaming higher at the moment, you have to appreciate that it can only go up so high before it's going to have a correction on the weekly chart. So we moved up to that high, then we pull back. You know, that's above the 162 at the moment. You could say we may have had another little move. There's a high there, and there's a dipping area there. Only had a minor dip just down there, and we're at the 162 of that range. So as I'm looking at the ranges and looking to see how we've dipped before moving up, we're very high up on the weekly, very high priced, and the market could need a correction. You know, the monthly, last movement down was here. So when we look at the monthly kind of swings, that was a move up, pull back. That's very overextended. You would think it would need a pullback. All right, so we know we're at the high of the move. And I always say I don't want to buy at a high of a move. And I can see that we're getting very elongated in the legs. If I look at some of these legs historically, there was a kind of a leg here. So we've still got a little bit of way to go in comparison, but it may need like a month down, just a month down, because in this leg up here, you can see there's little pullbacks here before moving back up. It's had no pullback in, I don't know, 1, 2, 3, 4, 5, 6, 7 months. It's due a pullback. So if you get caught at the top, you've only got yourself to blame. All right, back to the daily though. Looking to buy a dip. Look to the daily range and allow it to have 1 or 2 days down into the 62.79% area. Allow it to correct. Don't get caught on the top. All right. All right, that's my thoughts. I guess the big question at the moment is how much more US dollar weakness can come following the FOMC statement last week before the market has a natural correction. Doesn't mean to say that the likes of the pound or the euro dollar don't further move up for the year, but they won't keep moving up before having a bit of downtime. I just want to go back to the euro dollar. All right, so euro dollar's not happy at 111.39, so that's that weekly high to the left. So for those that may be coming in late, weekly chart, this high over here held yesterday in New York, 111.39, as we move back below yesterday. It's this high over here on the daily. Price has just broken a very minor. That was the New York rally there. Price has just broken a very minor bottom here. So you could be getting short, stop somewhere over above this top here or somewhere above here. Looking for this to today come down and challenge yesterday's low. Now, before I go, in this area here, price may well come down, come back up to retest this little low and also retest here. So looking at here for a retest potentially, put your stop above there. All right. Leave you with that thought. Just to let you know, if you want to join me tomorrow, there's the webinar link. Tomorrow I'm going to be going through the beginning webinar series, part 2. There's 15 parts in the beginning webinar series. This is the second one of that series. Going to be looking at all the different order types, understanding what they are, getting into the MT4 platform, showing you how to execute those. So you've got a good understanding of those. If you need a refresher on orders, then that's the webinar for you. And then more analysis from me on Thursday, okay? All right, we're going to leave it at that. Ricardo, thank you for your comment there. It's not easy at the moment, the market, after last week's interest rate decision. Some pairs are definitely up there at areas where they could reverse. Pound's very strong at the moment. I wouldn't look to short the pound at the moment until it gave you a clear signal. It's very strong at the moment. But the euro is not so strong. It is giving you maybe a bit of a signal right now to maybe look to the downside. So I'll leave you with those thoughts and look forward to seeing you next time. Thanks, everybody.